Today, it's Edwin's Monday evening property rant. Hello again, it's Martin North from Digital Finance Analytics. Welcome to this post covering finance and property news with a distinctively Australian flavour. And just before we start, a quick reminder that tomorrow, Tuesday, we'll be running our next live stream event at 8 p.m. Sydney time. And I'll be joined by Damien Klassen from Nucleus Wealth. And we're going to talk about the current state of the economy and the markets, and also explore their property calculator, which is actually one of the best tools that's out there. So do join us tomorrow, Tuesday, 8 p.m. Sydney time. The links are in the comments below. But today, I'm joined again by Edwin Almeida. Well, hello, Edwin.
G'day, Martin. How you going? We're going to be talking about responsible lending legislation and gangster economics. So I thought I'd get into character. So getting ready for the March 2021, where anybody can get into the action and make some money.
And what tool have you got in your hand there? It looks a bit suspicious.
Look, it's for the people that don't want to. Look, the mustache is gone. For the people that don't want to pay the bills, Martin. For the people that don't want to pay the bills.
Yeah, I thought perhaps it was tightening the lending standards, but clearly it's not. It's for loosening the lending standards.
Got a bit of ink on me. I'll just remove this because I'm going to have a hot drink whilst we're talking. Otherwise, I'll swallow my new dentures.
Very good. Well, it's a really interesting week. More information about what's going on. More information potentially about what might go on down the track. So let's start with the responsible lending laws, which of course were announced. Well, actually, it's not quite clear to me what really has been announced, right? Because this won't actually come into existence until March next year. And the legislation, of course, still has to be presented to Parliament, and they might actually have a debate about it. But essentially what it's doing, it's swinging the pendulum away from the banks taking responsibility towards end consumers taking responsibility for loans. So if you want to ask a bank for a loan and you pony up information, it's all down to you whether it's right or whether it's wrong. And ASIC disappears in a puff of unsmoke.
Well, we also heard from China telling us that they're going to go carbon neutral in 2060 as well, didn't we? So you got to take each announcement with a grain of salt. Look, Martin, it's legislation that's it's going to be, the bill's going to be brought before the House, I imagine, in March 2021. I know a lot of our followers were talking a bit last week with regards to what was going to happen. Oh my God, the market's going to be puffed up again. We're going to keep on pushing the can down the road and so forth. But look, let's just take a chill pill for now, and let's just look at this pragmatically. Let's just take a step back and let's look at it. First of all, it has to be approved in Parliament, correct?
Yep.
So both houses have to approve it. It's not something that the government can snap their fingers and say it's going to happen. It's enacted into law, and therefore we're going to go down this path. I think what the government is doing is really what any government would do anyway, and that is really try to keep a positive spin on future events and divert the people's thoughts, divert people's anxieties away from the pressure that everybody's under at the moment. So, but let's look at it methodically. First and foremost, this legislation is going to be put before the House, or the bill is going to be put before the House, before Parliament in March next year. And as I keep on saying to my clients and my colleagues, and that is, at the moment, 1 week, 1 month, let alone 6 months, is a long time. Between in the property market right now. Anything can happen in a week. Anything can happen in a month. Anything can happen in 2-3 months. We've got, albeit we've got potential further devastating news as to what's happening in China with the three gorgeous dams, with the floods that they're having to cope with at the moment. That's ongoing. It hasn't stopped. The economy there, we don't really know what's happening. We've got the US elections coming up in November. That's going to have a global effect. No matter what part of the globe you're in, no matter what part of the world you're in, that's going to have an effect. So there's a lot of things happening at the moment. But if we bring it back to home, I think where people have to anchor themselves is I come back to the fundamental principles, and that is listings on market. Monitor the listings that are on market. Monitor what's coming on market and who's coming on the market. Right now, we've only got just 18,500 property listings in the Sydney region on market, and people are experiencing a world of pain. The only thing that I feel that this legislation or proposed legislation is doing at the moment is perhaps slowing down the inevitable, and that is the dumping of more listings onto the market from the people that are in a world of pain. That's just to start off our discussion, Martin, off the bat.
Well, there's a couple of other interesting data points. I, in my surveys, include information on whether, in fact, people were able to get a loan when they applied for it or not, right? And if you go back a year after the Royal Commission, there was about a 15% failure rate, or maybe 20% at the worst case, right? In other words, people couldn't get the loan they wanted, right? Now, I can tell you that over the last 6 months or so, that's gone right down. So most people who have applied for a loan over the last little while of mortgage have been able to find a mortgage, right? So It's not like there's this dam stopping people actually getting finance, right? So that's the really important point. So even if they do change the rules, it's not going to suddenly open the floodgates to millions of other people who couldn't have borrowed before, right? The other interesting point is that, of course, there is still the APRA legislation, which exists. And in fact, APRA has some quite strong things to say about the parameters against which banks must manage their portfolio. So in a way, we've always had this duality between ASIC's responsibility and APRA's responsibility and who is responsible for what. So they are trying to sort of sort that out, even if it swings towards APRA. Now, of course, everybody argues that APRA is really there just to support the banks. But actually, if you look at the legislation and the guidance that's been provided by APRA, it is actually relatively strong now in terms of some fundamental principles around when to lend and how to lend. Now, that means that this is not going from 100% to zero, right? What it's doing is it's shifting the dial a bit, but I'm not sure it's going to have a massive effect. And interesting, the NAB economist came out the other day saying, well, it might have a 1% impact on property prices, but it's not going to be huge. So I'm just, not as bullish as I noticed all of the articles over the weekend in all of the normal places on the normal portals, all saying, property market's coming back to life, Eureka. No, I don't think it's quite that. I think it's more, a little bit of a movement. And as you say, it's not certain, and it'll be March anyway. So we got 6 months on the old basis. So anybody who applies now is going to be assessed on the old basis until March.
That's correct. The loan approvals now are only, the indicative approvals only last 3 months. It's not like you can get a loan approval now based on post March next year if it goes through Parliament. There are a lot of variables that we've still got to take into account, and we've still got to consider before we start panicking as to the huge sale prices coming back in, or the government pumping the market. Let's look at what the incentives, the novel incentives that the governments have thrown at the property market thus far, and at the SMEs for that matter, and let's analyse what's happening so far and who's taken them on board. I mean, Tarek keeps on bringing some real data, and there was in one of your podcasts with Tarek, you guys talked about the simple fact that not a lot of businesses, or the small to medium enterprises, not a lot have taken up the government grant proposals. So, and that's where the rubber meets the road. That's what makes up something like 74% of our economy is the SMEs. Yeah, the ones that have taken up a lot of these incentives are the big industrial companies, the big players in this field. So there's a lot at play. But for people to start panicking and thinking that the market's going to ramp up again, and AFR bringing out articles about huge property gains and perhaps even talking about bear barbecues again. I don't think it's going to happen, Martin. Like I said, a week, a month, and let alone 6 months is a long time in this marketplace, in this current property marketplace.
Yeah, well, no, I agree with you, Edwin, on that. And, like I say, I think there will be some minor tweaks and changes, but I don't think it's going to be a fundamental 180-degree turn. There are too many downward pressures. And in fact, you made a series of reality versus fiction points, right? Maybe we should go on to those because they actually also underscore just some of the other factors that we're actually up against at the moment.
So the first one is overseas students. I mean, we know that the property market was supported by a lot of overseas students in the rental arena, particularly around high-rise development and medium-density development around universities. So we know for a fact now there's reality or fact, and then there's fiction, right? So if people are believing, or if the Spruconomics and everybody else involved with it are believing that Chinese students are willing, ready, and able to come, they may be willing and they may be able to come, but they're not going to be coming to Australia anytime soon. And I take that on two premises, Martin. The first and foremost, the propaganda, the media in China is the Chinese media is not favourable to their people travelling over to Australia at the moment. So I don't believe we're going to see an influx or a surge of Chinese students for the next 2, perhaps even 3 years. The second point of this is, if you look at some of the commercial real estate articles at the moment, you'll see that there are ramblings already. The fact that 10 universities have got something like $26 billion worth of real estate that are looking at potentially doing joint venture agreements with developers, or selling off the land, or doing whatever with the land, renting out some of the facilities and the properties. Why? Because over the next 4 years, there's a $16 billion deficit in their coffers. So therefore, they know themselves, and these are academics that know themselves that we're not going to see a huge intake of overseas students, particularly Chinese students or Asian students, in the next 4 years that they're looking at, because that's what they're basing their sums on. And I'm saying 2 to 3. If the relationship between Australia and China doesn't deteriorate any further than what it already has. So that's the first point.
Yeah, and just to add to that, of course, the borders are still shut at the moment in any case.
Exactly. So again, even before international travel is as I said, the closest thing that we're going to get to travel bubbles are with Hollywood, Bollywood, and Hong Kong would, because according to, and that's if we follow the Queensland government's chief officer's decrees. So I think that is a possibility. So right. We could get a lot of movie stars here in Australia, Martin, buying property. Who knows?
Yeah, well, maybe. And of course, the other point is migration overall is stalled. And in fact, Frydenberg last week said that they were expecting net negative migration for the next couple of years.
Well, that's right. So we've got, and two points on this. First, what country in the world has not been decimated with this pandemic that has looked at Australia as a desirable destination to migrate to? Name me one or name me two. but and who's going to have the means and the capital to to bring money over to in order to buy something, and in order to pump up the market. So, and as we've said, as you just mentioned, also there's international borders. We don't know how long they're going to be closed for. Are they going to be closed for another 6 months, 8 months, 12 months? Is there a second wave in Europe? Will there be a second wave in the US or in the Americas? Who knows? It's an unknown factor. So there's reality, and then there's fiction.
Yeah. And of course, the thing about migration is there's always a bit of debate about how much migration has really supported the property market, but it has been a factor, right? But the fact that that has gone away means that the overall population growth in Australia is going to be growing at a slower rate now for the next few years than it's been for at least a decade.
Exactly. So we've got fact and fiction there.
Yeah.
Then obviously on the back of that, we've got the unemployment numbers. What are they really going to be? Fact will tell us, reality will tell us that they're going to be above 10%. Fiction will tell us that we're going to get close to 7%. And then again, with the podcast that you've done with Tarek and how he brings out what's reality of how many small enterprises are going to survive this pandemic, and how many are going to be standing in the next 6 months, 8 or 12 months, up until the government lifts the insolvency regulations, or until once all that's off the table, then it's only then that we're going to find out how many are going to hit the wall, or how many have already hit the wall and are trading insolvent.
Well, in fact, the changes that Frydenberg again spoke about, right, will actually enable small businesses to continue for longer. But of course, if they are actually in difficulty, what it means is that the contagion of their poor performance will spread to more creditors. So actually, it's building a deeper structural issue, because essentially, once they do get into difficulty, that difficulty has more time to propagate more widely.
That's correct, and that's why I said in our last podcast, we've got to be careful, and buyers have got to be careful where they buy. Yes, there are. I said there are certain suburbs that may have found a flaw already. Other suburbs are yet to find a flaw. There's still 10%, 15, 20% from finding that flaw. But the question is how strong is that flaw moving forward? How strong is that flaw? Because those flaws, when I say flaws, the drops in value of property will be sustained by the economic flaws in that particular suburb, based on the demographics as well. So there are a lot of things that come into play. And on that note, we said earlier that this announcement of the winding back the regulations by Frydenberg, what that may do is slow the amount of listings coming on market, because people will feel a little bit more confident going into 2021. However, there are two groups of people that this doesn't capture. There are two groups of people that I've said all along that any of the incentives that the government's thrown out there, any of the lifelines that the government's thrown out there, is not really capturing. And they are that's the retirees and the foreign investors that have got holdings here in Australia that are being liquidated because they're going through their own strife over in Asian countries, predominantly China. So they're going to have to come onto the market sooner than later, because it's unsustainable for them to go on, because they don't have mortgages. The retirees, the majority, won't have mortgages. They don't have a social media presence, so they can't make a lot of noise to get the oil. They can make, it's a squeaky wheel that gets the oil, and they're not really on social media that much. And they're not working, so therefore they're not paying taxes. So that dynamic, I feel, or that group of people are the people that are going to offload whilst the market is still relatively confident, and there's still activity. There's still a lot of buyer activity, and positive buyer activity in a lot of suburbs. That in a lot of areas where properties are presented very well to market, that the younger generation, or the people that fear of missing out, are walking into and paying what agents are asking for in some cases.
Yeah. But talking about agents, the overall transaction sales volume is extremely low. I just wonder how many real estate agents are actually on JobKeeper and how many of them are actually in huge financial pressure.
Well, that and you and I have been talking about this particular issue with the industry for quite a number of years now, Martin. Because I flagged this when we were talking about the retail industry, when we were talking about the hospitality industry, and to an extent also the tourism industry. We were talking about how they were, from 1, 2, 3 years ago, they were already in a lot of pain. And things were already shifting and changing in those arenas. And with that, also, I've been vocal about the real estate industry, that how, although property values have gone up, in different, 2019, 2017, we've had the ups and downs along the way up until the beginning of this year. But the transaction figures, which is what gives the industry its fees or its commissions to work with and to pay their agents, they have been decimated by up to 50 to 57%. And that's a lot when you consider the fact that there's close to 54,000 registered real estate agents in New South Wales and about 8,500 registered corporations in New South Wales.
Yeah, I saw it. I laughed slightly because decimated means something different. You can't be decimated to 50%. But the point is, it's a lot lower. And
it's gangster economics. I can say anything I want, mate.
Oh, fair enough. Yeah, well, yeah. Well, if like Westpac, last week said the RBA is going to take rates down in October. This week they've said no, it's going to be November. So if Westpac can change their tune by a week, by a month, as it were, anything's allowable. And on that, there's something else. 700,000 loans or thereabout are in sort of freeze at the moment, right? Now, if they go wrong, people are going to be able to go on living in those properties for quite some time, right? This takes a long time to work through, as we discussed the other day. So it's not like suddenly magically all of that's going to blow up on the same day.
That's correct, and this is where perhaps some people taking what we've said out of context, and that is we can see that as I said, there are two groups of people: the overseas investors and the retirees. On the one hand, that for me are the people that are needing to sell, that they must sell, or that they want to sell. You can add a few more from other areas on that as well. But then there's the group of people on the other side of this equation, and that is that, quite frankly, if you know you're already underwater, if you know you're gonna be liquidated, I mean, ghost the bank, and you're basically living rent free for the next 18 months, 2 years, because as we've said, the legal system hasn't sped up. It's slowed down, and therefore it's going to be a long time before the banks can take possession of principal places of residence, which they will be hesitant to. They will take investment properties. They will take properties that are tied up with commercial loans and car leases and everything else along that. But if it's your pure outlook as to the principal place of residence, they're going to steer away from it. That's going to be the last thing on the agenda to walk into, and that could be a year, could be 2 years, could even be 3 years, mate.
Yeah, absolutely. And interestingly, APRA came out last week and actually told the banks to use multiple channels to try and communicate with people who weren't responding, right? And one of the banks said about 1 in 5 of the people they tried to contact just never phoned them back. So this is a big deal.
Yeah, look, it is a big deal. It is a big deal for the banks, and hence the reason why I'm somewhat positive. I'm persuaded to think that the banks are going to be somewhat responsible with the lending, because at the end of the day, it's an institution that wants to make money for the shareholders. It's not an institution that wants to give out loans so that they can fall over, and then because the bank, the government, doesn't necessarily have the money to keep on bailing them out. I mean, we've got to look at this. We've got to, as I said, I'm going to get a bit of stick from what I'm saying now, but I still think that the banks are going to be more reasonable and be more cautious as to who they lend money to. It's going to be, and quite frankly, I mean, we're not talking about mortgages of $200,000 loans. We're talking about million, on average in Sydney. I think the average home or is around 750 across the board. So it's not a small chunk of change. There's a lot that will be at play here. And look, reality is that that banks are employing more people or growing their arms to deal with, or the departments to deal with mortgage stress, people that are going under mortgage stress, and are going to go into basically into default scenarios where they will have to do something legally about to take possession. So that's reality. Reality is, if the banks are doing that, I don't really think that they're going to be that crazy to go out and loan to anything or anybody that has a pulse.
No, I agree. And like I said earlier on, there is a lot of evidence to suggest they're still being quite tight on that. And, I'm going to go out on a limb here and suggest maybe there was a bit of horse trading done between the government and the banks with regard to banks. If you give people a mortgage repayment holiday for a few months, right, what we'll do is we'll actually address the responsible lending thing and make it easier for you, right? Now, I've got no evidence for suggesting that, but it just seems to me that funny sort of trade-off, one to the other, could well have been what was behind it all.
Look, it may well be. We'll know when we cross that bridge, I guess, a bit later on down the track.
Maybe. Now, of course, the tourism is also just worth reflecting on briefly, impacting businesses, as we said earlier on, impacting, of course, short-term lets as well. Airbnb is now suddenly turning into longer-term lets because there's no alternative. International tourism looks to be pretty much frozen out. We might get a bridge to New Zealand, yay, or not, or for some parts. But, with all of the virus issues up in Europe and still in America, you've got to recognise that a lot of tourism, internationally speaking, will be out for at least another year or so.
Yeah, and one of the things that I've been thinking about is, there's not going to be a lot of there won't be a lot of flights, and a lot of carriers have gone broke, or in the process of going broke. And how much is an air ticket going to cost? Between countries now, because of what's been going on and what's happening, and so they're those things to consider. Who's going to be willing to travel outside of their country to come to Australia? And we're not really that close to Europe, and we're not really that close to the Americas either. It's a long journey from Sydney to anywhere else in the world other than New Zealand.
That's true. And, I don't mean speculation, I wouldn't be surprised if they make a condition that you get, the virus antidote or the virus vaccine, right, before you're actually allowed to travel. So, you'll need it in your passport before you can enter a country. That sort of stuff has to be worked through, but I wouldn't be surprised to see that.
But look, it's going to play out that way, and it's going to be one of those. The question is it going to be one of those yearly jabs, Martin? Is it going to be one of those yearly jabs? Because right now we've got COVID-19, and as I keep on saying, is next year going to be COVID-20 and 21 and COVID-25? I mean, how much further do we have to go down this rabbit warren? And hence the reason why people are going to think twice about traveling overseas, because of all the different jabs that you're going to be having to get, not knowing what the outcome of those vaccines are going to be long term for your health. They're things people are going to consider. Just get on the motorbike and go touring around Australia.
It's a big country, plenty to see.
Exactly.
And I guess the last point, just quickly, is that maybe existing properties will, continue to require repairs. And if, in fact, one of the get-out-of-jail card was to sell it and move somewhere else, and you now perhaps can't, you may be up for more repairs where you are.
Again, and this is the dilemma that a lot of the retirees are facing. A lot of homes all over Sydney. north, south, east, and west. Whether they be rentals, whether they be principal places of residence, they're coming to an era now where the kitchens have to be updated, the bathrooms needing to be updated. There are mold issues. There's all sorts of issues with the old freestanding homes, which we predominantly talk about in this podcast because that has a greater effect on the economy than all the apartments that have been built, because that's another podcast on its own. So not only that, Martin, but now with all these incentives that people have been getting and first-time buyers have been getting, or if you want to build a new home, all these incentives, what's that doing? That is adding more fuel to the already fire that's being stoked by the current climate, and that is we're building new dwellings further out west, going further out west, further afield, where there is no infrastructure. Yes, you can work from home, but that itself has its own issues, because you don't only just need to, it's not only just a matter of being able to work from home, but do you have the infrastructure? Do you have the facilities? Do you have the schools? Do you have the daycare centres, the kindergartens, the primary schools, tertiary education around there? What do you have? Because you're not going to be in your home 24/7, 365 days of the year. You want to go out, you still need to do your shopping. So all these things come away. So all we're doing, again, all these incentives are doing or promoting is new construction, which is going to add more properties to the already oversupply that you and I talk about.
Absolutely. I'm talking about new. There was a segment on the news I saw this evening. They were talking about a high-rise called the Cube up in Darwin. Right, and they actually featured somebody there who'd bought a property for investment purposes about 3 years ago. I think it was the top floor, and they had water in each year to the point now where there's water, mold, and everything else, and it has been declared as uninhabitable. So that property, which I think they paid around $700,000 for, I think, is now not habitable, and therefore from a property investment perspective it's going nowhere. And there's a big debate about who's responsible. Is it the builders? Is it the the people looking after the property now? And they actually made the comment on the program tonight that actually it's very unclear and there's very little consumer protection. In fact, generally there is less consumer protection for anybody buying a high-rise than if you buy something like a car or other electronics equipment. It's just amazing.
Yeah, and there's already an oversupply of, as we said, of high-rise development. There's an oversupply, even freestanding homes, and there are a lot of vacant properties around. So there's going to be a lot. It's going to be a long time before all that is absorbed, regardless how many people they choose to bring in, by way of immigration, post 2-3 years time. So the numbers just so there's reality and then there's fiction.
Yeah, that's exactly right. And unfortunately, a lot of the fiction's being peddled by you-know-who, all the mainstream media, all of the portals talking about property. Now, what about another big fiction, right? And that's auction results.
The biggest fiction of them all. Like I said, I believe more that the fact that China will go carbon neutral in 2060 than a lot of the stuff that's pumped out in the mainstream. That's pumped out in the mainstream media. The auction results again. Can people slow down and really take a chill pill and take a step back? Have a cup of coffee, have a tequila, whatever you're into, but just chill out. Let's look at the actual numbers. There were close to 750 properties that were taken to auction over the Saturday on the weekend on the Saturday. Some got sold post, a lot got sold pre-auction, a number got sold on the day. But out of the 750 or so, 380 got sold, Martin. That's so. Last week was what 314 from memory, or 318 off the top of my head. Now it's not a lot when you consider the fact that last week there was something like 543 or so properties listed for auction. This time there's 750 or so, or 40 properties listed for auction, and the transacted numbers are 380. And what they don't tell you is how many got sold less than what they were bought for in 2017 or even 2016. What they don't tell you is what they really got sold for, because what has increased is the non-disclosure of sale prices on the portal. That has increased.
Absolutely. It's more certain than anything else that there is less disclosure of prices, and actually even prices for properties that didn't sell at auction but were sold private, by private treaty, they're also not being reported more. So it is harder and harder to get any read. Now, if prices were actually being hit higher than the asking price, they'd shout from the rooftops, right? The occasional article picks it up, right? But the 90% that are not suggests to me that in fact the price at which things are settled is considerably below what the market wants you to hear.
Look, more than that would be more than true. A more than truthful statement, because that's the nature of this beast. That's the nature of the industry. If you have a successful sale, you beat your chest and you run up and down the street, you're beating your chest and knocking on everybody's door, telling what a great job you did. And if it's not, you put your tail between your legs and you disappear for a few weeks. That's just the nature of it. And look, it's so obvious. It's so obvious, but yet the mainstream keep on pushing it. They keep on pushing it, and the spruikers keep on pushing it. Again, another fact and fiction point to be added to our ledger.
Absolutely. And, the point about auctions is that it doesn't really tell you very much at all. So actually, the auction count tells you very little, and particularly if you compare it with last year when the volumes were higher, right? And the prices are not reported, and yet the amount of coverage it gets over the weekend on all the mainstream channels, including all the news bulletins, plus all of the portals, you'd think it was the most critical piece of information driving the whole of the property market. It's not. It's a sideshow.
That's correct. And the thing is, things have. I was really expecting the numbers to really start climbing above, well and truly above 19,000 overall.
You're talking
and above
now, right?
9.
You're talking listings. You're talking listings.
Yeah, listings.
Right?
Yeah, for sale listings in Sydney. I was expecting them to climb over 19,000, and I was also expecting freestanding homes to be well and truly over 9,000. But what I've noted, we're sort of floating around 8,500 freestanding homes on average over the last 4 or 5 weeks, and 18,500 listings, for sale listings in Sydney region over the last 4 or 5 weeks on average as well. But when you look at previous years, this time previously we're looking at 25,000, anywhere between mid to high 20s in terms of overall listings, and well and truly over 13,000, 14,000 freestanding homes. So all this is playing out what is considerably a low amount of listings in retrospect. If you really want to start comparing historical data to what's now, which a lot of spookers tend to do, and they tend to hone in on. Well, what have you got to say about the fact that we've had historical low numbers from the beginning of the year to now, and we're going through all these troubles? That's why I say we only need 2 or 3 more listings per suburb in Sydney, which incorporates 618 suburbs. So effectively, we only need 1,800 to 2,000 freestanding homes to come on the listing, for sale listing side of things, and it's going to be all brakes are on.
Well, the other point to make, Edwin, is if you look at the mix of recently listed properties compared with properties that have been on for a lot longer, we've got this big runt of property that's been on 180 days or more, right? And that's not shifting, right? So what we've actually got is an even thinner amount of really new stuff that's coming on, and some of that new stuff is selling, at the margin. That's true, but you've got this massive block of property that's been listed to death, frankly, and is still not sold. So that tells you something else about the nature of the market.
Yeah, and I get to explore further than the average Joe does on what's happening on the back end of a lot of these listings, and I'm flabbergasted to see how a lot of new listings coming on market are from people that bought, as I said, as early as 2 or 3 years ago.
Yep. And as you said earlier on, what you often find is when it is sold, it's sold at a lower price, so they're losing money on the way through. Now, the last thing we're going to talk about today is your property in focus segment, right? Now, you've got a couple of really pearlers to talk about today.
Yeah, the first one is 20 Bank Street, Padstow. We said in our last podcast, we spoke a bit about you make money when you buy, not when you sell, and obviously you got to be careful what you buy, and not necessarily rely on what the agent's telling you that things are going to happen in the area, particularly with respect to developments. So there's a lot of research that needs to happen. All sorts of different things can happen. You can get your view could be built out and all sorts of things. But in this case, there was. People were waiting, were land banking. They bought the property for 1.8 million, and it's just being resold for almost 50% drop in value a couple of weeks ago. So always be careful what you buy. But this is what I was saying to one of our clients in that particular area, and that is that wants to buy into that particular area, and that is that. These are the type of listings in 2-3 years ago that were bought. These properties that were bought 2-3 years ago that drove the values of the surrounding homes, further up as well. Because this is what CoreLogic and Domain and REA and all the other Spruconomics portals they plug out and they pump out and say, oh, look, see the property values are going up. But yet when they're going down, or when they get resold, they're very slow in reporting. And in this case, even after the sale, the hedonic is still way above the actual sale price in its predictive daily index. So that was an interesting one. As I said, we were going to talk about the West because we've been talking about the North in previous podcasts, but and the last one is an interesting one. One of many of our followers' favourite suburb, Kellyville, 4 Tuscan Avenue, Kellyville. We were participating. I was participating at the auction on this one. Hence the reason why I've got some of this data. So this property was bought in 2015, for $1,065,000, and it was being marketed with a guide of $1,050,000. The hedonic says it's valued over $1.2 million. It got passed in at the auction on Thursday at 975, and it's now under a private treaty campaign with a guide of $1,059,000. So therefore, if they're asking $1,059,000, you can be assured that they'll take offers below that. So we're between 975 and $1,059,000. So it's going to be sold in between that. And my understanding is the owners are keen on taking an offer in between that now that it got passed in at 975. So that's what's happening. That's what's really happening in a lot of areas and with a lot of homes that people bought, 3-4, as early as 3 or 4 years ago.
Yeah, interesting, Edwin, because I've been doing quite a lot of work across a number of postcodes for some of my followers, and the difference between the asking and settlement, which is of course a very important gap, is definitely widening, and it's not surprising to see a 7-8% drop between asking and settlement. That seems to be often where it's hitting at the moment for even houses.
Yeah, and this is where again we're focusing on the freestanding homes, because I think they paint a greater picture and a better picture of what's happening, the economic pain that the established market is feeling. We haven't spoken about high-rise development because it's a different beast altogether. But once that starts falling over, once that really starts crumbling down, it's going to have further effect on the established homes, because these development sites, the high-rise development, push the market upwards by what I call property osmosis, because it dragged values up. As the spruikers were selling 2-bedroom apartments, 3-bedroom apartments for $1 million, where it was unheard of in particular suburbs, and therefore people with a 3-bedroom home were saying, "Hold on a minute. How is it that in that high-rise development they want $1 million for a 3-bedroom apartment? We got a 3-bedroom house with land, and we thought it was only worth $750." So it's that osmosis process of rises in value. The same is going to happen now as they fall further down. Obviously, that's going to have an impact later. Hence the reason why I say you've got to be careful with the economic floor that the property values are landing on in certain suburbs, and see how stable that's going to be for the next 2 or 3, because they're the unknowns. That high-rise development market's still yet to really falter and really fall over, because of the rental guarantees, because of the mortgage holidays that the interest repayments that the banks have got the investors on, and so forth. It's really yet to unfold. So it's going to be very interesting, over the next few months, let alone 6 to 12 months.
Yeah, absolutely. And I noticed that your clock is still not quite at midnight, right? So the clock didn't go backwards thanks to the changes to lending rules. So
That's
we're
correct.
still close to midnight.
Yeah, the doomsday clock was revitalised, and said, "I'm not going past 12 o'clock because I've got some more oomph, some more energy. I've been given another lifeline to hold on to, so it's not getting to 12 just yet."
Okay, and the very last thing to ask you is, of course, it's a holiday on Monday in Sydney. So are we going to do a Monday show, or are we going to slip to Tuesday? What do you want to do?
We'll still do the Monday, Martin.
Very well. I'll be here bright and early for our normal recording next Monday. So, guys, don't worry. It may be a holiday in New South Wales, but Edwin and I will be on duty. So join us again next week. Edwin, thanks for your time.
As always, Martin, thank you. And thank you for all the followers that have been reaching out on Twitter and saying hi, and all the ones that have been tapping me on the shoulder as at the property inspections as well.
Yes, you're certainly getting a reputation, Edwin. See you soon. Bye.